So, good afternoon, everyone. Depending for those of you who are in Uganda, it's almost 4 p.m. Good evening, good morning for some of us who are in the early mornings. This is a second continuation for our stock market discussion, especially in the US stock market. That's what we're going to talk about, no treasury bonds, no nothing. So it's extremely important to have that. And I know Anthony and a few people who have managed to finally set up their accounts. It was important for us to have this conversation and discuss. It's going to be so much of a few things to discuss. The last 2 to 3 weeks, where since we last talked, there has been so much volatility in the market. One thing I talk about, I know, if you have been investing in treasury bonds, in unit trusts, in land, in rentals, what we normally invest in Uganda, and if you have even been paying attention to the stock market in Uganda, everything is stable. In the US, the stock market is, for lack of better word, the last few weeks and months has been so much volatile. You can wake up when everything is moving very well and you're in the green. The next day you wake up when it's red that literally wipes out 2-3 months gain, right? But the good thing, it recovers. And I'm starting from there because this is part of the risk we are taking. You are joining in when you choose to invest in especially the direct stock market, especially when you choose direct stocks. I'll give you an example. I bought Oracle first in, I think it was Feb. Let me do a little bit of presentation here because we need to, for us to be in a position to see. I bought Oracle. That was, I believe, in Feb there. At the time, when I bought Oracle, I believe in Oracle. It's one of the few companies that are enabling AI, and it has significant investments and contracts they have. At the time when I entered Oracle, at first it was 200, Then it came down to around 148 in around Feb, March, and I was so pained, but I stayed in. Then at one time it reached as high as 240. And we were in the greens around June 2026. Then recently it came down to almost 115. And I bought more. Because this is a company that has almost 600 billion in contracts, and it's tied with OpenAI and a few others. If you missed out on some of the NVIDIAs, so you have to take advantage of these other companies that are literally part of the ecosystem of AI. And it has, now I'm yet to come back. My original position at 200, I'm yet to recover it, but I know I'll recover it, right? Because right now we are in 145. Yet the position when I loaded in more at around 115, 120, I remember I posted it in our chat group, if you remember. And the question where I'm starting from this angle is to paint for you a picture on the difference between the ETFs and the stocks. So the stocks are like this. The good stocks, especially when you do some good research, right? There is another company that I truly, truly like. It's called Oscar. It's Oscar Healthy. There is so much innovation that's happening in health, especially technology enabling them to do it. I'm assuming you can see what I'm presenting. Can someone confirm? Oh, perfect. I don't want to think. So I love Oscar, right? When I entered the Oscar position, I entered it, I think that was 1 year ago. At the time, it was, I think I entered it at around 22 year. Around 22, that was around October. I missed it out when it was below that, because before that, at one point in, when my friend talked about it in like April last year, Jan, it was around 13, 14, but I entered it in October and it was around 21, 22. And this, you can see it has been going up and down almost every single month. Almost every single month. Now, yes, I'm in the green for it. It's actually, it's at 20, at one point it reached 30 and I almost sold it off because I'm tired of it being too much volatile. But because it's in an innovative space that if they get even half of what they're doing right long term, I know this the share price can even go as high as 80, 90, now even 100. We have seen such companies doing it that way. So as you come into the stock market, there is that. You have to brace yourself with that element that the direct stocks will go up and down, and there is so much volatility lately. There is some, it's like almost, I don't want to use the word betting, but it's like we are betting against these companies achieving certain obnoxious goals, and every time they don't meet them to the expectation, or even if they meet them. I was listening to the earnings call of Hims and Hers. It's one of another company in my portfolio, and it met all its targets, the EPS, but the question was, and I remember reading one of the earnings report analysts by, I think it was JP Morgan, and their question was, is this sustainable? They have a lawsuit with, they recently rejected some new drugs by FDA, I believe, and that alone crushed us from 30 plus where we were back to 26, 25th. And yet this is a company which is sitting at the grasp of healthcare, the modern health technology and the drugs they are making and what they are innovating at. So there is that. You have to always pay attention to that. Yet, as much as I even talk about that, then when we come to, I'm not so sure which screen you are seeing, but I'm trying to present something else, but I'll bring it here. Yet when we come to the S&P 500, come here, I'll bring it here. Yet when we come to S&P 500, the last week it has hit new highs. Like every single month it's growing, right? So this is the S&P 500 for Fidelity. They are the same. They track at the same thing. Year to date, it's at 14% return. 1 month, it's 3%. 1 year period, 12 months, it's at 23%. You see? So when you even think about it that way, in a critical manner, you're like, at least I'm entering something that even if I go to the ETF directions, I believe all of you have all the ETF reports that you can use to easily understand what's going on and choose which ETFs. But like I said, the S&P 500, one of the S&P 500 managed by any of the mutual funds, any of the big investment companies, they track are the same. They are the same. The difference is different. Even if when I bring the this one of Vanguard. So I always ask people who tell me, Alex, can I buy Vanguard and I buy Fidelity and I buy BlackRock S&P 500? They are the same. They track at the same thing. You can see. This is for Vanguard, the VOO, right? Year to date, 14%. 1 month, 3%, 3.4. 1 year, 23%. So it doesn't matter which one you buy. You buy which one depending on maybe expense ratio and all the other things. Anyway, back to the point I was trying to make. That even with all the volatilities, the return is really very good. That's why sometimes I say if you cannot make research and if you do not want to see the greens and reds every single month and that might raise your blood pressure, you go the ETFs. Anyway, we have gone to 3 ETFs and I'm keeping a few ETFs discussion because someone asked a question later in the conversation. Let me first go to the question that was important that someone brought in. How do we opened the account? I know we had a discussion with one of the person recently, one of our members recently. For them, they started the journey of investing finally. They opened the account, they got verified, and it's good. Now, the challenge is on funding the account, especially if you are in Uganda or if you're not in America, literally. Now, there are 2 ways where you can fund, and because of the testing I've done, I'm going to. The first one we talked about is you can fund it with a Wise account. If you can open up a Wise account and you join your debit card, the UGX, to your Wise account, you fund it to your UGX, and then you transfer to the dollar, then you buy through Wise. That's an option there. But the challenge is the FX is determined by Wise. Let me repeat that. So there are two elements you can fund your, there are two elements we have, two options we have to fund our interactive broker account. That's only, the first one is Wise. Interactive broker did it in such a way that you can design, you can directly link your Wise account to the to your Wise account, to your interactive broker account. Apologies. So what then you have to do is you link your Wise account to your UGX debit account, then fund your UGX account with your debit account. Then transfer UGX to US dollar on Wise and fund your dollar account. The risk there, the cost of transfer between UGX to USD is where you have a risk, the risk of FX, to do with the ability for you to say, I have to take the rate that Wise will give me. Right? The alternative, and then we're going to open it up and I give you the option, the pros and cons. The alternative is the wire transfer, and it's what we did with one of the members. The wire transfer would require you to open up a US dollar account with your bank. That's one, if you do not have one. If you have one, very good. Two, when you go into your interactive broker account and you reach a level where you have to fund your account, instead of going to Wise, you click Interact, add wire transfer. Wire transfer is the international transfer. With the international transfer, the wire transfer, then they create a unique direct account for you in Citibank, New York, that has your interactive broker account. I'm being specific here. That way, when you go to your bank to fund your account, you are sending money to this unique number they give you. You must save it. So when you say, and that's why the challenge with the Wise, the good thing and the challenge, the good thing with the wire transfer, you cannot just send money from any account. No. You can send money, you have to put there which account the money will come from, and even they give you the account you have to send it to. That when you send that money, imagine every single day, I was doing the statistics and analysis, every single day they might receive, let's say, 10,000 wire transfers from international investors. Interactive Broker has over 4 million plus international investors. So you have to be specific. So they give you a unique number. And that unique number will have your interactive broker number. The beauty of it, it links your US dollar account in Uganda to your interactive broker account, that if at any one point you sell and you want to send money back home, they send it directly to that account of yours, the US dollar account. So those are the two options we have. Now the limitations of the two. The US dollar, where the wire transfer, which is actually for now my primary suggestion, because long term, whereas the Wise account, the Wise linkage is good, we don't know if they will keep it, because this is an app. Technology somehow revamps so much things. Yet a bank-to-bank account transfer, that one, you know, it's not going to go anywhere. So let's talk about bank-to-bank. The wire transfer, when you link your account, it must be a US dollar, one. Two, the challenge comes in the first time. The first time is when you need to literally go to the bank and create your wire transfer instruction, the SWIFT instructions. I do not recommend doing it online if you have an online account. But after that, they save the beneficiary, then you can always do the wire transfer. The challenge, the good thing with that, you can control the US dollar rate you get. That if majority of us earn in UGX because we are based in Uganda. For those of you who are not based in Uganda, the conversation is different, but you understand, like our friend who is in Denmark, Lillian. Then for Lillian, it might be a little bit different in terms of how they might end up doing it. Anyway, let me bring back the UGX. So when you get to the UGX, you withdraw. I will literally withdraw the UGX, and that's what we did with the member who managed to do it. I said, go withdraw that money, go on the street, get the dollar rate you want, the highest possible, instead of dealing with a bank. Then from there, transfer go deposit the money onto your dollar account and do your wire transfer. That is the benefit, that you are controlling the FX you're going to get. It's only the difference here is that it's going to be maybe on the wire transfer charges. But remember, we have talked about this before. I do not recommend you investing $100, $150, $200, because if the wire transfer, my research so far is between $15 to $25. If you are investing $200 and the bank is charging you $15, that's already 8% return gone in costs. It makes no sense. Okay, it's one of cost, but you see where I'm going, right? But if you're investing $1,000 and they're charging you $20, that's okay. If you're going to deploy $2,000, $3,000, and you're going to charge you $25, that's okay. $3,000, if you get your UGX equivalent, go to the street, get a better dollar rate than what the bank is going to give you. Bring your dollars and deposit it on your account and sign your forms and wire the money to your wise. In the next day, that money will be on your account. Actually, if you wire it in the morning, in 2 hours, it can even be on your account, reflected for you to start buying, right? And the good thing, where you have to do the physical paper instructions, you do it once. You just have to tell the bank, they have to save. If you do online banking like the bank I use, they have to save that as a beneficiary, an international beneficiary. Then you don't need to always input those details, because that number they give you in your wire transfer is unique. The limitation with the wire transfer is the one I've talked about, the cost element. The $15 to $20 international wire transfer cost. But if your job is going to be to invest $1,000 plus, then that it becomes manageable, because either way we are investing into this market for long term. If you're doing it quarterly, and it's a one-off cost, then it's easier. Then the wise option, the wise transfer, for it, the cost of transfer of dollars from your wise account to the interactive broker is cheaper. It's way cheaper. I think it's like $5 to $7. But the cost of transfer of UGX to dollar, that one you do not have control over that. You get the rate that Wise will give you. Now, because you are transferring from UGX to dollar, when you're transferring dollar to UGX, the rates are always better because you're transferring from a stronger currency. Wise is getting a stronger currency that they can sell to anyone. They can give you a higher rate because they can sell it to anyone else and they get a better margin. Because you're transferring UGX to the dollar, the Wise account is getting a UGX equivalent that they rarely can easily see. They can only sell it to a Ugandan. The rate, when we were testing it out with one of our members here, we noticed that the rate they end up giving is not the best compared to what you can get on the market. And that's the drawback. Because we could see on the market, we could get, I think it was 3,780 or 3,800 on the open market. And is it 3,800 or 3? I'm confusing the buy and sell. Because if we had 1 million, we could get like $250 on the open market. And yet the Wise was giving us close to like $230, $220 because of the FX. So those two elements, that's why the Wise option is now becoming more costly, because indirectly it's easier and their cost is cheaper. But if you're going to give me a bad rate, however, the alternative is if you have a dollar account and you have a dollar debit card, not so many people always have, few people have dollar accounts, but they don't have debit cards. Then you can link the debit card to your Wise account and fund through the dollar to dollar. But there you are also incurring the cost, because you're going to incur the cost of the bank dollar to dollar Wise. You incur that. Then Wise charges you to fund the interactive broker. So my recommended option is the wire transfer. It's going to be painful the first time, but long run it's much better, and at least it keeps the trail of record, that when the time comes for you to withdraw the money out of the system, it comes back to an account that is already in your names, and it's not an app, it's not this, it's not that. That's, for me, the better bet, and that's what I'm opting for. I'm going to first pause there to see if people have some questions.